Good morning. This is Andrew from Trend Following Mentor. Today is January 30th. I apologize I wasn't able to make videos or actually updates on the blog the last several days. I've been traveling, and what I do is educate, and I'm traveling actually at several firms and discussing with them algorithmic trading, system development, and most importantly is the trading psychology. And I'm also available on an hourly basis, but also I was called to do a trip for several days, 3 days, and I'm traveling. But I wanted to talk about the stock market. I mean, it's starting to fall. But what's interesting is, not to say fall, it's in a correction. I'm not a bear, I'm not a bull, but what I am is I read the market, what it's doing, without any opinions. And the fact is, this is one of the longest rallying stock markets. I forget if it's either the 6th or the 7th if you go back to the last 100 and some odd years. So just putting everything into context, where we are, one of my very simple rules is if I'm below these moving averages, below the 10 is below the 30, I'm out of the market. Because the market, right now, I don't know what's happening. I mean, we can turn right back up or we can really fall out of bed. But in all my other videos that I've been discussing this divergence, this negative divergence. I've been discussing the distribution days. And distribution days is when the market falls in higher volume. And yesterday, we even had another distribution day. So we had a clustering of these distribution days, which is very negative. And it isn't that I'm a bear. It's basically I'm reading what the market is telling me, what's happening. And then you put into the other context what's happening in the emerging markets, that the Chinese PMI has contracted. I mean, there's a lot of negative what's happening, but unfortunately, that there's a stream, let's say, consensus of bullishness amongst investment advisors, which is also negative, which the bearish sentiment is an extreme low. If I'm not mistaken, I read somewhere in one of the updates at the bank that I've been working with, is that it's the lowest number of bears since 1987. Not saying that we're going to have a capitulation like that, but again, anything can happen, and what you need to do is you need to protect yourself when you're trading. This is what it's all about. It's not having opinions. It's following your trading plan. I mean, Boeing fell 5% yesterday. The volume was extremely heavy. Market after market is having problems, and it's just because the Fed is reducing their buying. This is an old bull market. If you're looking at it from 2009 or 2011, caution needs to be taken into context. It's not opinions. Have a trading plan. Follow it. Have the psychology to follow it. That's what I do. I help build trading systems. Again, I do it for institutions as well as I do it for individuals. And even more importantly is I work on the psychology of it, because you can have the best so-called system, even though there's no best system. But if you don't have the, let's say, the fortitude or strength or commitment to follow it, it's worthless. So basically what I do is I have hourly consulting to help you make your trading plan and algorithmic trading, or even if it's fundamental. And also, there's a lot of issues that I talk about as money management and risk management and trading psychology. And also I do it by the day for institutions. I come on board. We spend several days, and that's what I'm doing right now. I'm traveling. And if there's any way I can help you, I'm here to help you. I also apologize that I've answered emails late. Many people have emailed me all different ideas and questions. So again, I appreciate your interest, and really what I want to say to you is have a trading plan and follow it. Thank you.